Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Troilus Gold Corp. Troilus is traded on the TSX under the ticker TLG and on the OTCQX under the ticker CHXMF. And I'm joined today with the president and CEO of Troilus Gold, Justin Reid. And Justin, great to get you on the program as always to get an update on all the de-risking work going on with Troilus. You guys have had a lot of news flow since we've talked last, so we'll go through some of these key items. And first up to bat is I noticed that you've added a couple of key team members to the roster, really as you move from exploration and de-risking into legitimate development, construction plans, and looking towards building this into a mine. And so I want to maybe highlight some of the team members that you brought on board and what their experience is, why you brought them on, and what that means looking forward.
Hi, Shad. Great to be back. And thanks for having Troilus on again. Just like we've spoken about in the past, our goal as we move towards cash flow is to just continue de-risking Troilus. For the last 7 years, we have taken a 1 million ounce equivalent resource to a 13 million ounce equivalent resource across all categories. All the baseline work is done, all the feasibility work is done, a lot of the pre-development and then infrastructure upgrading and maintenance work is done. And now, as we're advanced through permitting and other things, we have to really start building out the execution team. And for us, the execution team falls into two categories: operations and project execution. So your builders and your operators. And we have found through our experience and through our studies that the most successful operations build out both teams at the same time so that your operations team has impact and influence on the project development team. So they're building what they have to operate essentially, rather than building a mine and handing it over to some guys and say, here you go, here's your mine. It just eliminates a lot of risk and for an easier startup and transition. So on the operations side, we're really lucky. We hired Andy Fortin, who has come in as our GM and VP of operations. Andy actually started his career, still a young guy, started his career at the original Troilus. Then he was part of the Meadowbank team, build team and operations team, Vignico's, and then spent 7 years at Eleanor as well through the build and the operations. Very experienced Quebec operator, also brings a team with him, and we'll waterfall those people in, and couldn't be happier to have Andy as part of the team. He's already making a big influence. He's Chibougamau based. With him, we've hired Jerome Girard as our head of processing, who has had a very similar track record as Andy, and they've worked together quite a bit. And so we have our head of operations and our head of processing in, and we'll be filling in a couple other spots kind of over the next 6 months. On the build side, on the project execution side, we're incredibly lucky to hire Denny Ribard as our Executive Vice President of Project Development. Denny has a 35-year history, Quebec-based, has worked all over the world, has built multi-billion-dollar projects, and that's really what the basis of his career has been on. The aluminum smelters in Quebec, built the largest aluminum smelter in the world in Mozambique, 5 or 6 gold mines, one of the largest iron ore pellet plants in the world. And from a confidence standpoint, one of his recent positions, he was the head engineer for the Case, one of our largest shareholders. And the Case is the largest pension fund in Quebec. And he actually built the extension of the Montreal rail line, an autonomous rail line, kind of, I think, connecting Montreal to Laval. So he's joined us. You know, he's our hired gun. He comes in for 4 years, builds the mine, and then hands it over to Andy. But it's spectacular. And then on the corporate side, we brought in Chris Sharp. Chris Sharp is a mining engineer, 25 years of experience, a lot of time with Orico and Centerra, with a real focus on mine planning and optimization, making our model better, if you will. And he's going to be working with all these engineering groups, making our mine plan better. So a lot of hires, integration underway, and things are really kicking off. So really, really happy with the core team because we have the people in place that we need to execute this now.
Yeah, Justin, it's nice to see the band coming together here for the company, and you're bringing in that level of experience that you need to build a large project like this. I mean, a lot of people know it's a 22-year mine plan. It's going to be a monster of a project. It's a big resource, but it's going to be a big mine. And so I think it's also worth noting that on January 28th, you also mentioned the awarding of the contract to BBA for the detailed engineering as you move towards construction. That's a big part of the puzzle as well. So maybe walk through why you picked them and their pedigree.
Yeah, probably one of our most important choices is who's going to do your basic and your detailed engineering. Everybody's very familiar with feasibility studies, which is basically a moment in time. Here is the economics around, and here's how we propose you're going to build your mine. Detailed engineering takes it to a whole nother level. This is all of the drawings for all of the electrical, all of the civil work, all the foundations, how many bolts you need, your execution schedule, a huge amount of work, kind of 5 to 10 times what a feasibility is, if not. And so, a couple things that are very important to us. It has to be Quebec-based team. It has to be a team that's done this and or has massive experience for as well. So we put out 9 RFPs across North America, got them, reviewed them, and we were always leaning towards BBA. And at the end of the day, they built Detour, which is over 70,000 tons a day now, going to 1 million ounces a year for Agnico. They did all the detailed engineering for Malartic, which is at 55,000 tons a day, very similar to what Troilus is going to be. They had parts of the Côté project and others. So extremely experienced team, done it before, have made mistakes before as well. So we get to learn from that. The Quebec piece is incredibly important to us. And as well, Denny Rivard was one of the senior partners at BBA as well. And so knows how to work with them from an owner's side, which is our side. And I got to tell you, the team that we got at BBA was the A team. So all these engineering firms have multiple teams and they're spread out on contracts all over the world. We were able to secure the absolute best team. And so from our standpoint, kickoff is underway. The basic and detailed work is underway. All the teams are bunkered down in Montreal, going hard, and we've hit the ground running. So couldn't be happier.
Well, and as you look at the team coming together, the detailed engineering come together, a lot of people still wonder, what about permitting? I know you're moving towards your environmental permit. Give us an update on how that process is going.
Sure. We'll eventually, by the end of this, hit all our risk. Engineering and operational risk is always there. I think we have a really good handle on that now. Permitting risk is always there in mining. And as we've spoken about before, the risk of Troilus not getting permitted, I think, is incredibly, incredibly, incredibly low. Brownfields operation, 14-year history. We have full stakeholder approval and participation. So really the risk is timeline delays, if you will, as it always is. So the two major filings we have to do is the submission of our ESIA, our environmental social impact assessment, and our closure plan. Those are our two big filings as part of our framework. And under the new rules in Quebec, they started, typically you would just submit your ESIA, here's 7,000 pages, and then they would spend months and months reviewing it and coming back with questions. The project is much more flexible now, or the program. So we have started submitting a significant amount of our ESIA, which is almost totally complete, essentially complete. And we are already getting rapid response from the various regulatory bodies that we submit to. And we're making those clarifications, if you will, which is a normal part of the process, as we go in real time. And so our ESIA is being reviewed now. I expect we'll have full submittal towards the end of the quarter or early in Q2. But the key for us is that by the time we submit the full thing officially, it will already have been 100% reviewed. And so then we go out to consultations and other things, but it puts us, I'm going to say, ahead of the game. And we also get to identify any areas of concern. And thus far it's been really good. And at the moment of that submittal, we'll put in we will submit our closure plan at the same time. And so major de-risking on the permitting is underway. And I believe we remain on track to the timeline that we've put out. So far, so good. Again, another major kind of de-risking event, and that team's doing a spectacular job led by Jacques Lalure.
Yeah, checking a lot of boxes as far as some of the risks over any project, and you're putting all the pieces together here. Now, I guess just before we move on, Justin, let's just remind people of how big this project actually is as far as some of the metrics from the feasibility study. Maybe just highlight what the overall plan looks like as far as this project when it's up and running.
Sure, it's the bulk tonnage open pit deposit, so we're not going underground at all. We're going to be producing from four centers, four pits, three of them actually become one. We're going to be mining at 50,000 tons a day. That's going to give you an average production over the 22-year mine life of over 300,000 ounces equivalent. And when I talk ounces equivalent, think 80% gold, 20% copper, and some silver. This is going to be one of the largest copper deposits as well in Eastern Canada and meets all the critical minerals definitions of the federal and provincial government. So again, provides us with a lot of flexibility, a lot of alternative financing as per our LOIs that we talked about last time. And that's over a 22-year mine life. The 22-year mine life is essentially on a reserve, which is only half of our resource. So I think there is a lot of opportunity in the future for life expansion or scale expansion. So it's kind of just a start. Capital is just over $1 billion US. We put that out post the inflationary window. So we have a lot of confidence in that number. Obviously, as we go into detailed, those numbers will be better refined, hopefully down, but you never know. But I think we have a very good handle. All-in sustaining costs are going to be around 1,100, and at today's prices, that it gives you well over a $3 billion US MPV at our base prices, which was sub $2,000. And we're knocking on three now. Kind of gave you $1 billion US. So it's an incredibly levered project, incredibly profitable. Not really about the IRR, as we've spoken about in the past. These low-grade bulk tonnage deposits, because of the capital intensity up front, they usually drive your IRR down a bit, just like they did at Detour and Malartic and Cote and Greenstone. But when you're in production, at today's prices, we'll be knocking on $250 million US a year in free cash flow. So incredibly profitable operations.
Yeah, it's an impressive project and it's a long life project, and capitalizing on not just the gold, but also the copper and the silver kicker. But I think the copper is what helped bring in some of those LOIs we talked about last time. So it's definitely a project of note globally and definitely in Canada. And I think it's interesting you mentioned expanding the resources because, Justin, just on the 4th of February, you mentioned that you're hitting the ground with the drills again. Kind of two parts to this. You're looking for other areas near the mine that would be high grade that you could incorporate into the early years. And you're also still looking at expanding the resources here. So walk us through what you're doing, not just with the drill bit, but you're also even doing some geophysics just to look for other targets. Walk us through this exploration side of the plan.
Yeah, so when we took over Troilus, our thesis was it's not that Inmet had done bad work, it's Inmet did no work. It was a corporate decision to allocate their capital to La Cruces in Spain and Cobre Panama, which anybody would have. So Troilus is always a starved asset when it operated between 96 and 2010. And what we found is the more we drilled, the more we found. And so we have a lot of near mine opportunities that we just haven't got to yet. And that's kind of how we found the Southwest deposit. So we're completing a large geophysical program over our gaps, if you will. And we believe that there's significant opportunity to find another Southwest and or find higher grade. And so, Troilus doesn't need more ounces, but some higher grade would be awesome, especially if we could do it earlier on and really bolster that return. And so we're identifying targets regionally, and we are also drilling on site. So we're continuing with drilling at the west rim and call it higher grade targets around the mine that could have potential impact. And that would give us more opportunity in sequencing and just make our mine plan that much better. It's already great, but let's make it better. And then we're going to be doing some infill drilling around the asset as well, just doing some defining of higher grade shoots, again, bringing some work in. So I think in the 22 years that Troilus is going to be producing for, we're going to have drills turning every year. There's always going to be opportunities. And so we're just making sure everything is ready to go.
Yeah, Justin, it'd be nice to find more of that higher grade to help the front end of the mine plan economics. Like you say, you could sequence it in. You could have a little bit faster payback period, a little bit better economics, and paying back the debt in the very front end. But good luck with the drill bit as always. And then speaking of bringing it all together in the economics, I think another thing that helped in the very recent past on the 6th was that you also announced bringing in the largest gold fund, VanEck, as a strategic partner in a private placement for 5.8 million. Nice to have one of the biggest funds stepping up to the plate and participating. Walk us through that part of the transaction.
Yeah, it was a great opportunity, and I think an amazing endorsement for us. We have an incredible roster of institutional owners through Equinox out of New York owns 19.9. Franklin out of San Francisco owns 10% of our company. Investment Quebec, the case. Axios out of Paris. We just have spectacular shareholders. And these are large institutions that understand what we're doing, understand the process of development, and understand what it takes to get to the ultimate reward, long-term value. And there's really not many more important in this space than VanEck, who are long-term value investors. They run the GDX, they run the GDXJ on the passive side, but on the active side, $161 million fund. And, they are allocating capital to those assets which they see are going to move through the de-risking process over the next 2 years. And as such, they're not playing for nickels, they're playing for dollars. And I think that Troilus really sets up, to follow the path that you saw Artemis follow, as, we have a very similar trajectory. And so, yeah, a lot of DD was done, really experienced, technically biased team. And, Troilus was really happy to bring them in for their starting position. Knowing that we have them on the register is really going to help us as part of this whole de-risking process going forward.
Yeah, nice to see them at 4.3% and hopefully participating as you start building towards the capital stack. And that's the other big question we get emails about, Justin. So let's maybe just wrap up with that. How are you going to build this thing? Where's the money going to come from? We talked last time about the 4 LOIs. I think it was 1.3 billion, but you also have the potential for debt. You have the potential for royalty or stream. So maybe give us an idea of what you're looking at as far as bringing this capital stack together over the course of this year.
Yeah, lots of moving parts, and whatever I say is going to alter in some way. But the plan as it is now, we have 1.3 billion US in LOIs, really driven from the export credit agencies from Germany, Sweden, and Finland. Those are tied to us signing long-term offtake agreements with their refiners, being Arubis in Germany and Boliden in the Scandic countries. And those are well advanced. As well, we got $300 million LOI from EDC, Export Development Canada, our federal government, to support our trade partners. What you want to see there on the debt side is that those are LOIs. Huge amount of DD has been done. We will now take those LOIs, secure our commercial bank coverage, and bring them into a fully mandated debt package, essentially, which is a mandated commitment as we move forward. And we're getting very close to having that final mandate in place. And we're excited to have that to the market hopefully soon. I think that's a huge de-risking event for us. And, it won't be 1.3 billion. It'll be something smaller, but, we'll be targeting between 6 and 850 million US, something like that, which we believe is kind of the optimum debt portion for this project. We then have the options and possibilities of royalties and streams. as our asset remains unencumbered. We bought back the 2.5% NSR from First Quantum in September of 2020 for $20 million, and now that's worth multiples of that. So I think that was a good decision by management and board to do that. Then gives us more optionality. And then there's a number of other options available to us besides just equity. There's also prepays and other creative ways to fund what could be sitting with $100 to $50 million on the back end around that. So it's all going to come together. Our goal is to have everything in place by the end of the year. I think we'll have our debt fully mandated shortly, and then the other pieces will come in. What's nice is that we have a lot of time. Our permitting we hope to have our permits by the end of the year, early 2026, which provides us with kind of 10 to 12 months to get all of this in place, and the team's moving quickly. So what I would say is that this mine is extremely financeable. And a big part of that is not the gold, it's actually the copper. The strategic value of the copper, the demand for the copper concentrate globally is providing us with access to these export credit agencies who are aggressively trying to secure supply for their refiners. And so we're in a really good position.
Well, I think for today, we'll wrap it up there. That's a lot of different bullet points we've gone through on the de-risking of the project, everything from bringing together the team in-house, the team that you'd be working with for contractors, working on the permitting, working on expanding the resources, but also finding some of those high-grade areas near the mine that can improve the front-end economics, bringing in a key strategic stakeholder, and working on the capital stack. So a lot going on with Troilus. And if folks listening in want to follow along with all the news flow from the company, definitely click on the link below this interview. It takes you right over to the website, straight to their news section, where you can sign up to get updates emailed into your inbox, or you can just follow along with the news as it drops. I'm sure we'll be talking again in the near future, Justin, with so much going on, but always a pleasure to have you on the KE Report, and looking forward to our next conversation.
Thank you for your time.